Concerns are not easing up for Apple. The health of the China market is a pressing issue for the company. China's contribution to Apple's total revenue just hit its lowest point in nearly 3 years. On top of that, sales of the new iPhone don't seem to be off to a raging start, and the company is expecting overall revenue to be basically flat for the current quarter ending in December. So what comes next for the world's most valuable company? Let's bring in Martin Yang, who is the Oppenheimer Senior Analyst of Emerging Technologies and Services to discuss. Martin, just kind of broad strokes here. I want to get your read on the quarter and if some of this was to be expected considering the consumer environment that we're navigating through right now.
Of course. I think the September-December quarter, especially regarding iPhone performance and guidance, Apple delivered better than expected results relative to our prior concern of iPhone losing share to Huawei in China. After we adjust for foreign currency headwinds, China actually grew at a higher rate on a year-over-year basis versus North America. And this is despite very difficult macro situation. And the same for December, when we adjust for a 7% revenue impact from one more week of sales the year ago quarter, and the iPhone, with or without that, is still growing, and that's a very respectable performance.
You mentioned the Huawei question here, that being that we have seen Huawei come back with a phone that you could argue some are more impressed with in terms of where their chip development is right now. What is that threat? Is it about consumers going for the domestic homegrown player instead of Apple? Is it about, Huawei's technology? I mean, is it even a threat for Apple?
Yeah, I think it's more about consumer cheering for local brands as opposed to a technology edge. Huawei, the Mate 60 series of family, they have a three-year-old chip relative to Apple's latest, A17 Pro. And on performance-wise, Huawei's high-end phone doesn't compare to iPhone's latest.
Right. Okay. So all of this considered, we're taking a look at shares of Apple here this morning. Pre-market down by about 2%. What are investors not liking? I mean, you said that this was, in some cases, better than expected. What are investors souring on right now?
Sure. So when we're looking at December guidance, the company is guiding flat year over year versus consensus, which is expected to be up 5% year over year. I think there has to be some math to be done to really break down, how many analysts are really factoring that 7% advantage a year ago with one more week of sales. I think, we expect to see the stock trading higher throughout the day as more investors realize beyond headlines that Apple itself is in fact not losing share, and iPhone as a product has remained very solid even in China in a very tough macro environment.
Yeah, I mean, with that said, there is a debate about whether, in fact, these upgrade cycles are continuing to slow, whether they'll be drawn out more. You could argue the iPhone 15. Our own tech editor said, if you have the 12 upgrade, but if you've got anything after that, it's just not worth the upgrade anymore. Is that kind of what investors need to accept, if they haven't already, that the iPhone is about incremental changes moving forward?
I think as an Apple investor, you should have accepted that iPhone comes and goes in cycles in between 2 to 4 years since a very long time ago. And we have had 3 years of very strong iPhone product cycles. I think the one thing that's a little different this time is that we're not seeing iPhone declining versus the past down cycles because they benefit from an ASP mix shift to the higher end models, as well as a very robust emerging market growth. So, comparing to past iPhone cycles, I think the trough of current cycles, or the cycle trough we're walking through, is going to see maybe no growth as opposed to declines, whereas service revenues also complements very well on a down cycle with higher margin revenues coming to Apple at a much stronger volume than before.